All right, welcome back. Shares of Meta falling on a new report from the Wall Street Journal that the company is delaying the rollout of its flagship AI model. Meta declining to comment on that report. Deepwater Asset Management's Gene Munster joins us now for more. It's good to have you. Thanks for running on with us on the phone here. So this was going to happen apparently according to internal targets in June. Now it's going to be pushed to the fall or even later. What's your reaction to that?
Well, first, I just want to level set what they're talking about. The product is Behemoth, and this is reportedly a 400 billion parameter model. So think of that the size of the brain. And the latest GPT models are rumored to be around 1 trillion parameters. So think of this as half the size of what we're seeing from OpenAI. And the reason why it's important is because Meta's putting a big stake in what's going on with AI. So from the respect to Meta, this is a black eye, undoubtedly, and I think it speaks to how hard this is. But it's important to note, is if you look across all of big tech, is that Meta is actually seeing the benefits of AI at scale, even with these smaller models. For example, in the March quarter, they grew their daily active users at 6%. This is a 3.2 billion number. It's a daily number, versus 5% in the December quarter. And so we see that fractional acceleration, but that's part of more content, better targeting. So I think it's important for investors to recognize they're making progress. But that's one track. It's a headwind, but it doesn't change, I think, their opportunity. The second, and I think the more important takeaway here is these models are really hard to advance. And when we rewind to January, when DeepSeek came out, and this view that these models could miraculously improve through some level of distillation, that what we're seeing is that's not the case. And why that's important, first is investors should be slightly more tempered in terms of how these models are advancing. And second is they're going to continue to spend because when you're not seeing these improvements, they're going to have to throw more hardware on it. I mean, the subtle positive here is NVIDIA.
I mean, it's interesting. You raise a number of good points on what investor expectations need to be. We're talking about multiples, right? Multiples have gotten expanded on the idea that this is the biggest growth engine that's ever existed potentially for these companies. And then there is the money that they're spending to try and realize the power of this incredible technology. There's been almost a lack of patience, wouldn't you say, from investors? You're painting a picture at which we, the collective investor, needs to be a little more patient about how fast these technologies may come to fruition. The ROI is yet another part of this equation.
It is, and there's almost like a question of faith that this all boils down to is, do you believe? And I think that the skeptics will point to this and say, look at the path of these models improving. We're just not seeing this exponential step up in the improvements of the models. We are seeing exponential increase in the usage of them. That's, I think, important. But as far as the step up, and I think the second piece is if you look at the use cases around AI today, I mentioned that scale. I think Meta is the best example of AI working, but it's still largely like coding and customer service. So why somebody like me, like on what grounds can I be so optimistic about this? And ultimately, I think what we're seeing here is that this is really hard to do. And there's just going to be a handful of companies that are essentially going to power intelligence at scale in the future. And I continue to believe that despite this setback, what Apple's going through with some of their delays around Apple Intelligence, some of the changes in the ramp up of GPT-5, all these are on that same thing. It's just really hard. But that's good for these big companies because when it's really hard, no one's going to touch them.
No, but they have to get it right. And expectations are high that the performance level of these models is going to meet the moment. And that appears to be the principal issue here. According to the Journal story, engineers at Meta and researchers were concerned that the performance of Behemoth wouldn't match the public statements about the capabilities. That's a key issue here.
So, just to reiterate, the key issue is that the models aren't as smart as what optimistic people like me believe that they should be at today. And so that is something to factor in. But I do believe that ultimately you're right. They have to do it, but they're going to do it. And the reason why they're going to do it is they have to do it, because if they don't do it, they risk, I mean, these are average market cap of the Mag 7 is just over $2 trillion. There's a lot of market cap at stake here for them not to deliver this future, because there's, I believe, so many benefits to it. And so that's I think the piece that is difficult is that, yes, it's taking longer and harder, but ultimately I think that they will get there. And one other piece just important about what's going on with Llama. Keep in mind, this is an open source model, and based on our scoring, this has always scored the lowest of the top 5 models. And so there is a piece around this too, which is important. Is you could argue they should be making more progress faster, but by definition, it's open source, which does limit. There are some limitations about how fast you can improve the model, given you're operating in an open source environment.